Right now, index futures pointing to a pretty mixed start. It's been a pretty volatile quarter overall for portfolio managers, and our next guest says that managing risk is just as important as managing the return. Diane Avigdor is a portfolio manager and head of trading at Barometer Capital. Diane, great to see you again today. What are you focused on with your colleagues this week? What is front of mind for you?
So the market has been extremely volatile the last couple of weeks, and I think that this week will bring us macro headlines again. Traders are waiting to see what is going to happen coming out of the Eurozone, particularly Greece. It's very quiet in terms of volume, with the exception of last Friday. It was a little higher, but we have volumes on the light side. And really at a time when there is so many macro headwinds and a seasonal low volume time coming up, I think portfolio managers and traders are happy sitting on their hands right now and see which way the cards will fall. Long-term indicators for us are still negative, as we've been saying, but short-term indicators are skirting the bottom end of the range. So consensus is that we may hold here. However, there is lots of things going forward that we may stumble on, so we're still cautious.
So we have Greece, we have banks in the focus again today, but one of the things that will be in traders' sights over the next 3, 4, 5 weeks is the earnings picture. What kind of sense are you getting in terms of expectations? Are they too high?
I think traders are worried that expectations are a little too high, and they have been coming down in the last week or two. But following through from the first quarter, which was so excellent, traders feel that given what the market has done over the last 3 months, given the economic soft patch, so to call it, that the earnings expectations have not come down enough. So that's a bit of a source of anxiety as well, yes.
Well, what about that economic soft patch? There's still a ton of debate about it, how long it's going to last, how bad it could get. What are the assumptions you're making at Barometer?
So we don't make assumptions, actually. We don't forecast the data like that. But the data that we're expecting this week is extremely important. ISM, PMI coming out of global markets as well. The confidence number is going to be important, but I tend to discount it a little bit, given that it is just a reflection of the current state of the market, and the current state of the market has not been very good, so I can't see confidence being extremely high. That being said, if it does come better than expected, that will support the market. There's other things that support the market here, technicals, and just the fact that it's so oversold on so many metrics. We may have a bounce here regardless, and if the Greece austerity vote does go through, that'll provide a short-term relief.
When you're looking at lines in the sand, if you are doing so, is there a line in the sand with respect to the TSX composite that you're worried about? If we're below that, all bets are off? And a corollary of that is the VIX, which really hasn't gotten up into really panic territory yet.
That's right. So the TSX is in a tougher situation, I think, because when you talk about the TSX, you need to look at the commodity complex, given that's what's driving the Toronto market very strongly. So let's look at oil. Oil is in a tough situation. Oil, the whole commodity complex, has not rallied, has not led on recent up days. The market has been in a funk lately, but it has had certain up days, and the commodities have not been the ones to rally it, except maybe 1 or 2 days. The oil sector is still under pressure. Gold has tried to rally, is not able to, has come right back below its 200. So you have to look at the TSX based on the support that you see on the commodities, not so much on the exchange itself.
Okay, and so what about the commodities and how you react to that in the equity market with the price of oil drifting lower here, expectations that that could be persistent? Do you look at the energy stocks in Canada a little bit differently?
You want to see the stocks acting before the commodity itself. You want to see the stocks leading the commodity. You want to see all these large cap energy stocks moving up a little bit. There has been some rotation, and this is not so positive, unfortunately. There's been some bottom picking on energies and large cap golds in the last couple of weeks, but it hasn't helped them too much. So it's come right back in. We would like to see follow through on rally days. We'd like to see 2 or 3 days of follow through. We'd like to see bigger volume follow through. We haven't seen that. So while the market can be supported here short term, simply because it is so oversold, and we may get some positive data, for short-term traders, I think that you may be able to take a punt. But our clients are private individuals, and we're paid to make money when the conditions warrant, not to necessarily be fully invested at all times.
And if you were, because of all this oversold nature on a very short-term basis, as you emphasize, is there one sector that you would use if you wanted to play that game, say if in fact Greece gets settled and we get a relief rally?
See, this is why ETFs are so popular,
yeah.
because when you try to pick stocks, you actually you make a call on that business, and you really should like what you're buying. On the ETF side, you can buy a sector or just the market itself, and you can, if macro headlines dominate, then put on the macro trade, not the micro trade.
Diana, great to hear from you today. Thanks for your time.
Thank you.
Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital.